Okay, so we won't go too deep into definitions in this episode, but two key ones because we're going to talk about financial planning, financial products. Allison, would you mind just giving kind of our brief definitions of each?
Sure. So, financial planning, think there's a wheel of topics. No one is weightier than the other. It could be you're thinking through tax implications, controlling your tax landscape and strategy. You're thinking through estate considerations, doing a beneficiary sweep. You're thinking through cash flow. You're thinking through investments. You're thinking through all of these topics, right? And you're trying to make everything spin cohesively and efficiently around your goals, your family goals. That's financial planning in a nutshell. And it might result in maybe one year you use a product to meet a goal, but it's kind of tertiary, right? It's kind of after the fact, and it's really well understood if you're using a product, and it's just all based on advice. So that's financial planning, right? Product sales wrapped in financial planning, it's usually going to include a product, right? Whether that's an annuity, a mutual fund, a lot of whole life or variable life or universal life. That's a common one. And I'm not saying these things are bad, but it's somehow they're in every financial plan. And everybody, it makes sense for everybody. So that's when you've got product sales just kind of wrapped in financial planning, and usually you don't pay a fee to go through that process.
Right. So financial planning, comprehensive, consultative approach, advice driven financial product, a tool in the toolbox that sometimes gets conflated as financial planning, but ultimately it's just a tool. It might fit you, it might not fit you. It's probably not the only tool, if it does fit you, that, fills out your financial plan.
Yeah, and people are always paying somewhere, right? I just prefer to charge people up front so they know they're paying for a plan, right? You're paying somewhere. If you're getting product sales, then you're probably paying with the product.
Yeah, yeah, and I mean that's even just like a really like when I say it, it feels almost too simple. But like, hear this: like, no one's doing this for free. So if it feels like they're doing it for free, like look deeper because you're paying somewhere, and you should know where you're paying. So
Mhm.
again, it doesn't mean it's wrong or it's bad, but you should know where you're paying and why. Because if it's not clear to you, know that it's not just because your advisor's doing pro bono work for you.
Yeah.
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 Which I think so. I mean, that even starts to get into the meat, right? So, like, every industry, whether it's finance or, healthcare or agriculture, like they all have like a price for value framework, right? And we've talked about that in separate episodes because I think it is an important framework of like, hey, here's the value being provided, and here's the price would need to pay for that value, and then it's up to me as the consumer to decide if that price is worth it to me. That's really simple when you're going through the grocery store. It's a little more complex when you're paying for things like healthcare or financial services to define that price versus value. And I think like the right place to start here is on business models because like we were saying at the top, talking about financial planning and financial advisors, like those terms unfortunately just don't really help you very much in determining what the value is. So the next layer down is just to talk about business models and how people in the finance industry make money. And from a top line, we're going to talk about two different types of models or institutions: the RIA model or registered investment advisor model, and the broker dealer model. So we're in the RIA model, and that one is an independent space. Revenue is primarily coming from flat financial planning fees paid out of bank accounts or credit cards, and then fees for managing assets or an assets under management fee. So, money is paid for advice given, and then money is paid on an ongoing basis for implementing and managing investments and comprehensive planning over time.
And when you're in the independent space, you have access to the full marketplace, right? You're not it's just one big toolbox versus, a lot of times big company, you've got, a list of here's the portfolios we use, here's the products we like, right? Whereas in the independent space, it's just like here's everything, for the most part, and there's a responsibility with that, but it's in this business model, it's you don't have incentives tied to products or portfolios or it aligns your incentive with client success.
Yes. Yep. You're walking into Home Depot and you could buy any tool that you want that fits the job. You aren't handed a toolbox and told, make this work for this client.
Yeah, you're not always getting the hammer. You might need a screwdriver in some situations. So
Yep. 100%. So yeah, insurance or broker dealer model. So often in these cases, revenue is driven heavily or primarily by commissions or, takes on products like financial products that we talked about, right? It's like annuities, insurance, universal insurance, whole life insurance, proprietary mutual funds. So in this case, the incentive ties more clearly toward transactions. And oftentimes in these models, financial planning is given as a free service up front. And from a business model perspective, it's a bit of a loss leader, right? Because again, if you're doing this work for free, you're going to get comp somewhere, and the compensation in this business model is from the products that somebody ends up buying and purchasing. So again, this isn't like, this doesn't mean it's an inherently bad thing, or it's not inherently wrong. It just is limiting, and in our experience, free financial planning means that incentives are elsewhere, and that's at minimum a reason to pause and ask, where are the incentives and why?